One of the hardest things I find to do when you are creating a new business is actually creating a cash flow statement for a couple of reasons. First off is that I don't particularly enjoy it, just how I'm wired. Some people would love the numbers and hate visuals. It's just not something I love to do. The other thing that I find quite frustrating about it is that you're really just putting a finger in the air and hoping that you know which way the wind's blowing, because all of these numbers are pretty much going to be made up. So there's a couple of templates I can give you here. Here's one there, quite basic. Second one, a bit more advanced, but for you when you're starting out next financial year and the one after that, just makes no sense to actually create it at this early point. You will find a lot of these templates again have quite a old-fashioned approach, cartage, oil, a lot of these things, motor vehicle expenses for the modern business owner, the vast majority of them that are creating businesses, a lot of this stuff doesn't apply, but you just change that around. It's not a huge issue. It just shows how out of touch they are somewhat with most modern businesses. So once you've put those things in there, just remember what I was saying earlier about creating a business plan is that what you'll find is that your revenue expenses, your revenue projections will be wildly inaccurate in the assumptions that you make versus actual reality, and your expenses will be the same as well. You'll think that something doesn't cost too much, and then you've just forgotten so many different things that all add up, including stuff which is one of the most expensive things that you can hire. But here's a quick sneak peek of what we've laid out for the year. So investors starting funds, and then just you start to list down technology, branding, and other kind of initial kind of startup costs. Again, this will evolve as you get more information. So once you know how much an accountant's going to cost you, once you know what software you're going to start to use, you just continue to update this on a weekly basis. Once sales start rolling in, hopefully that's sooner rather than later, and our plan is to be profitable, not just sales in the first 3 months, is that you can then just adjust those and see where things are working and things aren't, and that allows you to be kind of dynamic. A little bit like the business plan, it will evolve. Once you get to the end of year one, you look down and you go, look how far we've come, or look what we've learned, or look at the assumptions we made that didn't work out. But you have to start somewhere, and that means putting a very basic cash flow statement together so you can start to understand, okay, well, what happens if sales don't hit what I'm expecting? Do I need to tip more money into this business, start it up? Do I need to ask family, friends, loans? Am I expecting other people to put money in? So you have to get realistic about what does your runway look like, because if you've set on a good idea, but you then get 6 months into this, you run out of money, you just have to prepare for that. And just so that's where the forecasting comes in invaluable, not necessarily for the numbers, whether they're going to be accurate or not, but certainly to understand what the first 12 months may or may not look like. Hope you found this useful.